110. Now we're up 5. Jeff Sica is with us. So is Tammy Bruce. Liz and Ashley also here. Jeff, to you first. You were a bear. You're dead wrong. We're at 17,690. Explain yourself.
Well, first of all, let me say I'm not wrong. I'm early. So just let's get that straight.
Okay. All right.
And if this market, what we've seen from this Janet Yellen speech, which to me showed that she's clearly scared to death of something. She's scared to death to raise rates. She's scared to death of something. We get the jobs report today. The jobs report at face value looks good. Even that wage number seems to be better. But the ultimate problem is this. It's that nothing surpasses what Janet Yellen says. So we get an economic report. If that economic report is too good, the fear in the market is that investors are going to assume that she's going to start raising interest rates, and this has been a rally entirely driven by low interest rates.
I don't think it was a particularly good jobs report. 215,000 new jobs created, but there were 47,000 new low-paid retail jobs. 29,000 high-paid manufacturing jobs were cut, gone.
Right.
It wasn't a strong report.
And that's why on face, it looked like it was a good report, but when you looked under the surface, exactly what you said is true, that there is structural weakness. Now, Yellen has indicated and believed that there's been structural weakness all along. And it's that structural weakness that causes investors that believe that bad news is good news to celebrate these types of reports, because the more you dig into them, the more you realize that this country is not only, it never really fully came out of the recession. Any growth we've had has been anemic at best, and Janet Yellen is scared to death to raise interest rates.
So you think the market does go down eventually when all this Fed activity is washed away or we come to our senses?
Well, here, the quarter is over. We've had one of the best rebounds we've seen since the 1930s.
Right.
So what's going to happen now is we're going to see earnings are going to come out. And the market is scared to death of earnings. We've been in a multi-quarter earnings recession.
So you're saying that 17,600 doesn't hold?
It's completely unjustified, but let me say this. There's always fuel behind it. The Fed has been driving it. The Fed has been manipulating the market, talking the market, and affecting what's called psychology. Market psychology is imperative to understand here. It's this collective thought that as long as the Fed is on the side of the market will move up.
You're still popular on this program.
Yeah. Less popular every week.
All right. Fox Business.